Ladies and gentlemen, welcome back to the channel. As stocks continue to rip higher, what is coming next? Whether you missed the rally, whether you are fully invested in the rally, which I hope you are, but if you are not, well, I'll give you the rundown of what I expect to come over the next couple of days and weeks. Now, here in this video, we will take a look at all of your breaking news, couple statements from Trump, from Besson, from Economic Advisor Hassett that are definitely going to be impacting markets. I will break these down and clarify, are they important? Are they not? A lot of comments around trade today, and I don't think that is an accident. They usually do this Sunday, so markets kind of have a little bit of a heads up on Monday, and I think it's all by design. Now, Trump said yesterday that he wants to keep the stock market at all-time highs, which I think is a great thing for our portfolios. So we're going to do all that. We're going to look at some of the earnings we have this week, the economic data, and discuss a little bit why I'm so bullish into the end of this year, into 2026. I feel like I've been a contrarian bull ever since the lows, okay? I feel like I'm still a contrarian bull. I'm still like in the small group of people that think the markets can go a lot higher from here. And I'll explain exactly why that is. First and foremost, though, if you guys would like to come trade with us live in real time, check out that link down below in the description of this video. The portfolio, one of them at least, the one I use for the trading community investments, is up 64.25% year to date so far at $75,000. I have a goal to grow this to $1 million by 2027. I'll give it the end of the year of 2027. So 2-ish years roughly, 2.5 years perhaps. But I think we can do it. What we are doing over there is finding the low-key AI stocks that are the diamonds in the rough, that are small cap names, less than $1 billion, up to a couple $1 billion, that don't have investor attention from retail, that don't have hedge funds and institutions that are, investing in them. One of which is in a $30 trillion total addressable market that is a first mover. There's no competition for this company that is trying to and successfully make online shopping, cart abandonment less pronounced. In fact, if you watch 10 people go into a Nike store in person, 7 people are going to walk out having bought something on average. If 10 people go out to their phone and go to the Nike store with intentions of buying something, only 3 people out of 10 are actually going to buy something. Okay? This company is trying to fix that. They now already have a 25% better cart abandonment rate, or non-cart abandonment rate, maybe I should say. And this company is backed by Google, Microsoft, and Tether. If that doesn't give it away, I don't know what else does. If you guys want to come trade with us, link down below in the description of this video. There is no retail investor that is like, there's no community around this stock, around this strategy. This is a very unique service that is being provided. Come check it out, link down below in the description of this video. And of course, hit that like button and subscribe to the channel if you have not done so already, and let's get started. Now, before we get into anything here, I want to share a part of this interview with Tom Lee over this weekend, where he actually says hedge funds and institutions are more bearish now than they were in 2023 and even in 2020. That is very exciting to me, as I feel like a contrarian bull. If Wall Street is this bearish, that means there's potentially a lot of upside for markets. Now, the question he asked Tom Lee is, what is Tom Lee's conversations like with hedge fund and institutional clients? Like, are they bullish? Are they bearish? Do they get mad at him? Like, are they on board with this market? And take a listen to Tom Lee's response. I think it's wild.
Your institutional clients didn't believe in what was happening, And that was the wall of worry that you kept using to justify, no, we probably have more momentum left. When you talk with these people, do they just want to curse you out, but also at the same time, they want to say, well, thanks for letting us know it's time to buy?
Yeah. Well, compared to 2023 and 2020, the institutional universe is even more bearish.
Wow.
They're convinced we're late cycle. One thing to keep in mind is if you look at political affiliation in the equity market, 65% of fund managers voted for Biden.
I did not know that.
Yeah. So, but if you look at the bond market, it flips. The
Right.
bond market historically votes Republican.
Correct.
So most people think Trump is a madman, right? Because they didn't vote for him.
Are you saying TDS is one of the reasons why people did not buy the dip?
Yeah, we write about it a lot in our research, actually. So it's a partisan stock market. And actually, people... So these have been uncomfortable conversations that we've had all year because...
I would imagine. Yeah.
Yeah, because they're like, Tom, we can't... You're telling us not to sell. Because our advice was, don't sell. Like, even though I didn't know where the bottom was, I did know it would be V-shaped.
Right.
But they're like, Tom, we can't do that, And then I was like, well, I showed the stat. Whenever the VIX is above 60 and then it closes below 30, 100% of the time it's been the bottom.
Correct.
And they're like, well, it's different because the Fed's not going to save you. So everyone found a reason to actually argue for why a recession was starting. And as you know, economists went full on recession call.
That's correct.
So if you're a equity guy, how can you go stocks are going to do V-shaped when the economist of the firm just said there's a recession? So right. I think they got caught, and we're not having happy conversations with people.
Do you still think this is so you've articulated now that this is the beginning of a new bull market, and I imagine those institutional clients lose their mind when you say that. In a sort of nutshell, why is that the case?
Well, it's fact based. Because we had a drawdown of more than 20%, and then we made a new high. So, like the weird math that like let's say a commodity trading advisor, a CTA
right,
has is that when you have a drawdown and then you make a new high, that date is the start of a bull market.
Huh.
So actually, like in the mind of the institution now, breaking 61.41 was a new bull market.
Wow.
But the retail investor bought it at 4,800 to 61.41. But the algos are going to say a new bull market started like last week.
Now, in broader market news today, Hassett says there is a 0 chance of a recession. Trump has said he'll replace Powell, quote, with somebody that wants to cut rates. U.S. Treasury Secretary Bessent has said that 100 smaller countries will get set tariff rates. Many never even contacted the U.S. And Trump says that he signed a major disaster declaration for Kerr County. Hassett anticipates trade deals to be finalized this week. Hassett on the UK and Vietnam trade deals provide guidelines for additional agreements with other countries. White House economic advisor Hassett says that some trade negotiations may extend beyond the deadline in a new CBS News interview. Fox News also did a interview with Trump, and they said, July 9th is coming up. What are you going to do about the end of the pause in tariffs? Trump says, we're sending letters out saying, congratulations, we're going to allow you to trade in the U.S. You're going to pay a 25% tariff or a 20% or a 40 or 50%. He says, I would rather do that. Bessent says that Elon Musk should stick to business, not politics. U.S. Treasury Secretary Bessent says the playbook in trade talks is to apply maximum pressure. Bessent says that tariffs to return to April levels with no deal by August 1st. And Bessent says the August 1st deadline in letters to nations. Bessent says the Musk board is likely unhappy with political activity. Also in the news today, India and the U.S. may agree on a quote, mini trade deal within 24 to 48 hours. Bessent says they are prioritizing 18 countries responsible for 95% of the deficit. So what I got out of today's interviews with some of the top people in the administration is that, hey, we are separately negotiating tariffs with the most important countries, with, let's say, 95% of the deficit. With the other 5% of the deficit, we're just going to send out letters and tell them what they have to pay. Or, well, what U.S. companies have to pay to do business with those smaller countries. So, although some of these headlines may sound a little on the scary side or bearish side, the countries that really matter are still being negotiated. That's what I'm getting out of today. So I don't necessarily think that is a negative from Wall Street's perspective. And Besant says that several significant announcements are expected over the next few days. And Besant says that Trump will send letters to trading partners notifying them if no deal is reached. They will revert to April 2nd tariff levels. And Besant says that America has the upper hand over the EU in trade talks. And Besant says they are close to several trade deals. Besant reiterates that the playbook in trade discussions is to apply maximum pressure. And he says it will be a busy next 72 hours on trade. He does say that trade negotiations with the EU are progressing. Now this week, starting off tomorrow, you have a couple smaller bond auctions, but that is pretty much it. Now typically following, the 4th of July, in really the month of July in general, it tends to be very positive for stocks. I think there's a lot of momentum in this market, and I do think stocks want to go higher. We're not even paying attention to 2025 anymore, guys. We're more than halfway now through the year. We're paying attention to what 2026 is going to look like. And 2026 looks very good. I mean, I can sit here and say we're probably not going to have a recession. That seems far away at this point. The big beautiful bill just passed. And yes, it adds to the deficit. That's not great, okay? Long term. Short term, that's very stimulative, okay? More deficits. Okay, let me put it like this. The higher the deficit, the higher the correlation of stock returns is. So the more government spending, the more your portfolio makes, is essentially the bottom line. Like, of course, it's bad long term, but short term, it is stimulative. Now, at the same time, no tax on tips passed up at till $25,000. So just doing, again, pencil napkin math here, if you're taxed at 20%, that saves the average person about $5,000. Okay. If you're taxed at 24%, that saves $6,000. Okay. That's a lot of extra spending money for up to 80 million Americans. 60 to 80 million Americans. Okay, let's go in the middle, say 70 million Americans times 5,000. That is $350 billion of extra money to spend in the economy. People are going to spend that money, okay? Or put it like this, every $1,000 you make in tips is you're going to save $200 or $240 if you're taxed at 24%. That's substantial for a lot of people. And, Americans spend all their money. So that's just going to go right back into the economy. I'm confident to say we're not going to have inflation and that we're going to get a lot of rate cuts over the next year. And I can also sit here and say by 2026, really in the next couple of months, hopefully, the trade situation is over with. I can also say that markets dramatically overestimated the impact on margins from higher tariffs. Now that deals are coming out, profitability is going to be just fine from Wall Street. I don't think we're going to see this big collapse in earnings. Okay. And I can sit here and say that AI is not going anywhere and use cases are going to dramatically pick up in 2026. All of this seems really good. When I think about the bear case is inflation does ramp up. Somehow that is a problem. Like, the Fed is so incompetent right now. It's ridiculous that we're even talking about this because tariffs are a tax. Like, that's not what will cause inflation. What could cause inflation is the $2.5 trillion deficit we're expecting to run for the next 2 years. That could cause inflation, not tariffs. Tariffs cannot cause inflation. It is economically impossible to get inflation from tariffs. Economically impossible, because it's a transfer of money, theoretically, from consumers to the government. That's it. Now, sure, could you see a one-time price increase? Of course. That's not inflation. What the argument is that, well, hey, you're going to have these businesses paying that money to the government. These businesses are going to raise prices, and then consumers are going to want more money. Okay. And then it's a inflation loop at that point. I'll tell you right now, go to your boss and demand a raise, and you're going to be fired. Or you're going to be, the next in line to get fired, essentially. The economy is not at that place. The economy, from a consumer perspective, is also not in the place of, willing to pay more for things. I see a lot of backlash on, that burger that used to cost $10 that is now $15 or $20. This freaking cat, dude, keeps unplugging my stuff. I just don't think the consumer is really willing to pay higher prices. When you put these combinations together from an economics perspective, I don't think it's possible to get inflation right now. Okay? So I don't think we're going to have the problems that Wall Street thinks we could. And that is where the upside surprise comes from. And that is where the upside will come from in markets. Now, imagine a scenario where we have all of those positive things happening, but then we have AI raising company margins, beating on earnings, and another big thing that I don't think a lot of people are talking about, with rate cuts, I think people will actually be able to sell their homes again. There is record levels of equity in homes. As people start to sell their homes, they're going to take hundreds of thousands of dollars to their bank account. What are they going to do? They're going to spend money. They're going to help support the economy. That is an argument that I have not heard anyone talk about yet. And I think that's because it's early, right? But by 2026, by mid-year 2026, we should have rates a lot lower. And we should actually see some of that start to, be noticeable. Okay. Now, for Tuesday's economic data, I know I went on a tangent there, but that's just my outlook. Again, another bear thesis would be we slip into a recession. Again, it looks unlikely from this point. The U.S. economy is so diverse, so strong. The American person is so strong. Americans are hustlers. I mean, that's why people are doing side jobs at record levels, okay? We find a way to make it work. Unless there is a big shock, which tariffs were initially, that would have caused a depression, but not at these tariff rates today. They're manageable, okay? I don't see the shock anymore. And I think it's going to become obvious over the next couple of months. The economy is not going to slip into a recession. Is it going to be great? Probably not. It might take a couple of years for consumers to really get back to where they were in 2021 or 2020 or 2019. But I think it's going to get better from here versus get worse. And that's my opinion. Now, again, for Tuesday, we have the NFIB Business Optimism Index, consumer credit change. That's actually pretty important right now. Are people still spending money? That data comes out at 2 p.m. on Tuesday. On Wednesday, you have the FOMC minutes and a 10-year bond auction. I actually think the 10-year bond auction is going to be most important. The FOMC minutes is kind of lagging. We already heard from the last Fed meeting what Fed officials were thinking, and we get a lot of Fed speak throughout the week. So, are we going to hear anything new from the FOMC minutes? Probably not. On Thursday, we get initial jobless claims. Fed Mausoleum will speak. A bunch of bond auctions, 8-week, 4-week, 15-year, 30-year bond auction. So, that could be important too. Fed Waller will speak. We know he is one of the doves along with Fed Bowman. And then you also get Fed Daily that speaks on Thursday. On Friday, Some data coming out of Canada, unemployment rates, employment change, some of that. But that's pretty much it. So kind of a slow week as far as economic data. Now, as far as earnings, again, a slow week as well. We're really going to get started next week with some of your banks coming out and getting deeper into earnings season, or the start of a new earnings season. But you do have some notable names here. Tuesday, Penguin Solutions, Saratoga Investment Corp, AEHR Test Systems. On Wednesday, you have AS and Bassett. And then on Thursday, you have really some of the bigger names. Delta, Conagra. Conagra is a big food company. Delta, obviously, important for travel. I think Delta could be kind of interesting. Are people traveling? How's bookings look? Okay. Travel tends to be one of the first things that gets cut when the economy is a little on the weak side. So if Delta has semi-positive things to say, or kind of the same old, that's going to be a really good sign for the economy. On Thursday, you have Levi's, WD-40, PriceSmart, E2 Open, and Vista that will report. Now, in terms of my expectation for markets, as Tom Lee said earlier, technically this new bull market is only like 2.5% in. And I do think there's going to be a massive chase for, all of the positive things we discussed earlier happening right now for the economy and for the markets, with AI, with inflation that's, finally abating, a bunch of rate cuts, all of that. I think there's going to be a massive market rally over the next couple of years. I think the SPY, the SPY, is going to be probably $1,000 before a lot of people, expect it to. Within the next 3 years, I could see the SPY, at $1,000 from here, because of AI, because of productivity enhancements, and all of the other things we've talked about. Now, between now and the end of this year, I think the SPY could hit 700. Okay, which, again, I've been calling for this since it was a 21% rally. Right, when I first talked about the SPY hitting 700, it was going to cost a 21% rally to get there. Now it's only a 12% rally to get there. So we've already been pretty correct in that call. Markets have already rallied quite a bit. I believe I was making this call before the bigger break around May, early May or so. Yeah, it would have been like a 24% rally then. Right around that area, I was calling for 700 on the SPY. Now, once you break new all-time highs, the chase starts. As markets get, looking better, more bullish, hedge funds and institutions, they have to chase because they can't miss the rally. So it's kind of self-fulfilling in that way. But to a certain extent, you do get exhausted. Okay. So one thing that I will look at is the RSI. It's at about 76 right now. Anything above 70 is overbought. Now, it's relative strength index. So it's relative to itself. Okay. What you're seeing now is just a market that is taking off to the upside relative to what it did over the past year. Okay, the velocity has picked up a bit. Now, the RSI on the SPY tends to go above 80 before you actually start to peak out and get a little bit of consolidation. Now, in fact, once you hit that 80, 82, 83 level, you can actually go up a little bit more after that, and then you start to get some consolidation, sideways trading, right? Digestion of the move. I think the SPY still could go into the mid 630s, maybe into the 640s, as high as 650 before you see that consolidation. I'm really leaning more towards the mid 630s, which could happen this week. Once we hit that level, that's when it's like, okay, we're probably going to get a 3 to 4% downside correction, or 2 to 3% downside correction, kind of consolidation, a little bit of volatility maybe, and then we pick up again, towards the end of this year and blast to 700. That's kind of my view. Could be wrong on that, but I do think there's a little bit of a pause coming. to be mindful of that. I do think right now is probably a good time to look at stocks in your portfolio and say, hey, could this stock double or triple in the next year? Or has it already rallied a lot? Like Robinhood. I've called this one out quite a bit on this channel because I recently took profits on Robinhood. Okay. I bought the stock in the 40s back in April. Okay. It doubled. Okay. It hit 100. Like at $100 billion valuation, do I think the stock is going to double again in the next 12 months? Probably not. But I can look at other stocks, like perhaps Tesla, that I think could double in the next year. Or Onto Innovation. I think that stock could double in the next year. I think maybe MongoDB could double in the next year, right? At a higher likelihood than Robinhood doubles. It's not really an AI stock. Sure, it's in the crypto theme. It's not really an AI stock. It's had a lot of good news recently. Like, that's a bet that I'm making. Okay. I think it's time to not say, hey, which stock sucks at this point? Because I think Robinhood will still do fine. But I think it's a time to say maybe, hey, what stocks offer me better risks to rewards? Okay. So a little bit of trimming in portfolios could make sense right now. Obviously not financial advice. Let me know what you are doing in your portfolio down below in the comment section. Hit that like button as well as subscribe to the channel. Again, if you guys want to come trade with us live in real time as well, check out that link in the description of this video. Have a great rest of your day, and I will see you in the next one.